Fuji combines liquid and lightning to have a trust minimized way to have, over-collateralized lending. Having this capability is literally allowing you to do 90% of all possible financial application you might think of. And if you look in, and still retaining the stateless nature of, of the Bitcoin model. So I think Liquid is a nice test bed for trying to see what's interesting for covenants, and especially, what could be an interesting proposal to include covenants in the Bitcoin chain. When you're borrowing, Fuji USD, you are not paying any interest, any recurring interest. You are literally depositing or withdrawing from Liquid at the velocity of Lightning using a summary swap provider.
Marco Argentieri is the co-founder of Fuji Money, a non-custodial platform for issuing Bitcoin-backed stablecoins and synthetic assets using both the Lightning Network and Bitcoin's liquid sidechain. In our discussion, Marco explained exactly how Fuji works. We discussed the idea of over-collateralized lending, and we got into why Marco decided to use the Lightning Network and Liquid to build this platform. I've also added Marco to today's show splits, so if you enjoy this episode and if you learn something new, the best way you can show your support is by sending in sats over the Lightning Network. You can use any Podcasting 2.0 app. There are dozens of them, but my favorite to use is Fountain. Quick shout out before we get into the episode. Today's show is sponsored by Voltage. Voltage is the industry standard and next generation provider of Lightning Network infrastructure. Today's show is also sponsored by Stackwork. Stackwork is a Lightning-powered transcription tool that takes the best of AIs and humans to create better, faster, and less expensive transcripts. We'll have more from Voltage and Stackwork later in the show. Marco, welcome to the show. I can't wait to discuss all that you're building at Volpum Ventures. Specifically, we'll get into Fuji Labs. But before we do that, why don't you start with your background in Bitcoin? Tell listeners a little bit about how you discovered Bitcoin, how you got into the space, and why you decided to build on Bitcoin.
Sure. First of all, thanks for having me. I'm a huge fan of your pod, and looking forward to have a chat about Fuji. I started very early in my career, I would say, with Bitcoin. In my town in north of Italy, just after high school, I created this local cash brokerage. Basically, I was meeting with people, I was exchanging Bitcoin for cash and vice versa. And, after that, I moved on and I work in classic software engineering, from mobile app development to distributed system. I will say that at some point I got the Bitcoin calling again. And in 2017, I co-founded Volpum Ventures, where basically we are R&D lab working on Bitcoin, Liquid, and Lightning. So we are, for example, the creator of Nigiri, which is a developer box for Bitcoin, Liquid, and Lightning stuff. Also, we offer Liquid Taxi, which is basically allows you to move assets like Tether without having to pay fees in Bitcoin. And also, we are the creator of Marina Wallet, which is basically a browser extension wallet that allows you to connect to web apps and use liquid asset and liquid web apps. I think that in last year, in Volpum, we decided to start researching a bit about covenants and in particular how we can use that to create synthetic assets. And so we started incubating this idea. So we published, this February, we published a paper called, Synthetic Assets Smart Contract on the Liquid Network. And we outlined it there in the paper with me, Dimitri Petukov, and Andrew Camilleri. We basically outlined there all the possible problems and how to create the scheme that allow you to issue synthetic assets. We received quite few interests at the time, so we decided, okay, so let's definitely make a venture out of it and let's create a product. So Fuji Money born at that point, and so
very cool. Now I want to talk about the tech stack here, because building on Bitcoin, Lightning, and Liquid, I don't know if there's any other R&D studio or venture group that is specifically targeting these three, all three of these at the same time, and only these three, why focus on this tech stack over all the other things you could do in Bitcoin and the broader crypto ecosystem?
Yeah, you said it right. We basically, Fuji combines liquid and lightning to have a trust minimized way to have, over-collateralized lending, but at the same time with fast and deposit and fast withdrawal. So I think that actually, the combination of having, a payment, a very fast payment network, like Lightning, and all the new capability that, a sidechain like Liquid can give to you, like covenants, and I would say what normal people call, smart contracts. I think that combining the two, I think is the right approach to try to start offering to Bitcoiners products that at the moment are only offered in a centralized exchange or in a centralized custodial environment. So I think it's a nice improvement compared to the status quo. So I think that at the moment, we're very conservative. We don't want to touch Bitcoin for some, exotic use case. We don't want to touch Bitcoin main chain. So we try to get around that, and we combine, as we said, Liquid and Lightning to try to offer more capabilities and trying to retain the trust minimized, approach that we have in the with Bitcoin itself.
Right. And so would it be fair to say that in your view, these are two complementary pieces of technology, Lightning for transaction throughput and like instant transactions, low fees, and Liquid for more expressive transactions? Is that roughly the right idea? Definitely other people may have different opinions, but I really think that basically Liquid can be the smart contract layer for Lightning applications. Because if you think about it, most of financial application or financial services that allow you to deposit or withdraw Lightning are all centralized. Every services like this, wants you to deposit and create an account in their own service. And it's great that you can do it with Lightning because it definitely improves, the throughput. I'm using Bitcoin. I'm not using a credit card. That's all great. But the service itself is custodial, and I need to trust the service like I will need to trust any other crypto lender or any other, crypto exchange or others. So I think having your logic of your application being on, I would say, on a sidechain like Liquid, it makes much more. I would say, let me see if I find the right word, but definitely makes you much more comfortable on what you're saying instead of just trusting your intermediary with your own Bitcoin that you deposit. So yes, again, I really think that combining Liquid and Lightning for their best capabilities, I think it's the right approach. I don't see them, as adversarial to each other. I totally see complementary to each other. Mm. And do you think that you mentioned the logic of some of these applications being put on Liquid? What can Liquid do? Like what can we take from a centralized form today and put on Liquid and turn into a trust minimized version? What are some of those examples?
Yeah, I think that let's start first maybe with the capability that Liquid gives you compared to just, the Bitcoin main blockchain. You can have one very important thing, which is confidential transactions. And if you think about in other blockchain, in other ecosystem, every transaction, I would say every DeFi transaction is public. So this means not only regulator or your government knows about your transaction, your trade, but also your competitor. And in a, I would say, centralized environment like a broker or, an exchange, only you, your exchange, and maybe the government knows about your trade, but not your competitor. Instead, but when everything, every detail of your trade is public, that's not great. And I don't really think that the mainstream finance will go to a public blockchain where everything is can be seen, right? So I think confidential transaction is one of those primitives that are very important for financial application to work. to essentially allow to have, the normal activities that we do with some sort of confidentiality that is required for those type of applications. The other, I think, is asset issuance. So the fact that you can natively create assets that are like treated in a transaction like Satoshi, like liquid Bitcoin Satoshi, and any other asset like Tether or any other is on liquid, definitely that's very important for many kind of use cases. So you can create options, futures, or any other type of instruments, and you can try to replicate them. I think that the third point is also covenants, which allows you to give much more expressive functionalities to your own coins that you have on liquid. So you can create more complex, more advanced rules for how you can spend your asset, right? Either liquid Bitcoin or any other assets being issued there. At the moment in Bitcoin, you only have you can only spend your Bitcoin if you spend with your own private key or multiple of them if you're doing a multi-signature, or maybe a time lock, right, after some period of time. But with covenants, actually, you can encumber your own coin to be spent only when some condition is met, and in this case, how you want to spend your Bitcoin and where you want to spend your Bitcoin. For example, I want to spend this Bitcoin only if they go, 50% if they go to this address, or only, So I think combining, having this capability is literally allowing you to do 90% of all possible financial application you might think of. And if you look in, and still retaining the stateless nature of, of the Bitcoin model, I would say, or the Bitcoin smart contract model. So you don't need Turing complete smart contract at all. If you look at all major DeFi, smart contract on, on Ethereum, for example, most of them, they don't need any state. They are all, every use case like that could be replicated in a stateless way.
So do you expect to see then over time people building on Bitcoin using both Liquid and Lightning? Because right now there's dozens of projects that are on Lightning. There's a number of them that are on Liquid too, but I find that there's a bit of almost a distinction. It's like you're either building on one or the other today. So I want to get your sense for like whether people will start to adopt both together and use this complementary functionality that you allude to.
I see, and I totally see your point. I think that much more use case will come on Liquid, will definitely makes clear to other developers that they can build those things. And also for us, even if we were, we are Liquid Federation member, and we were very, very, active early on in Liquid, a lot of things were not clear, and we discovered along the way, having this work done on the research paper for Fuji. So I really think that it's more like seeing the way, you will find, definitely the way. So I really think that this model of having, Lightning fast, Lightning as a fast deposit and withdraw from Liquid, and having your logic on Liquid, definitely this approach will catch on. And it's more like having tooling out there so other developers can experiment, can try from basic things to more advanced, enterprise level kind of application. So it's more like, I think, again, about tooling and having the right example out there.
Right. Okay, so let's jump into exactly how Fuji Money works today. What is the plan here? You mentioned over-collateralized lending. Immediately, that makes me think in my head. I think of projects like Maker in the DeFi ecosystem. Can you speak to some of the similarities and differences between those two projects?
Sure. So let me say first, Fuji Money is a non-custodial protocol that allows you to create any synthetic assets. It combines Lightning and Liquid to make you, to have you a trust minimized way to create, these synthetic assets, but at the same time, with Lightning, you can go back and forth from Liquid very fast. I think that the first the first asset, synthetic asset that we plan to issue is Fuji USD, which is basically synthetic dollar, synthetic US dollar. But actually, any asset can be issued as long as there is an oracle making attestation for it. It can even be then SP 500. It can be the 200-week moving average of Bitcoin, for example. So you create a derivative of Bitcoin, which is much more stable, but not linked to the BTC USD price. And that being said, I think MakerDAO is very similar in terms of mechanics, underlying mechanics. In both systems, you need to over-collateralize your own position, and then you can mint basically your synthetic asset. In the case of MakerDAO, it's called DAI, so it's just synthetic dollar. I think that the main difference is a technical one. MakerDAO is a pool, so basically all the collateral is all kept in the same smart contract. This creates, in my opinion, risks, systemic risk. And instead, Fuji is more like peer-to-peer, right? Basically, you are over-collateralizing, so you are putting your collateral in a covenant between you and the liquidator, but you are not mixing your own Bitcoin with someone else. And in the future, when you pay back your debt, you are getting back your own liquid Bitcoin that are locked in the covenant. So I think it's much more like combining the UTXO model versus single pool, stateful smart contract approach. I think this is the main technical difference. The other difference, again, is like, and I think it's the advantage on the Fuji side, is when you do Oracle attestation, like when you want to use an Oracle attestation in a covenant on Liquid, for example, you don't need an external party to push to the blockchain. Like, for example, in Ethereum. In Ethereum, you have some external party that needs to be aware of your contract and push, proactively to your contract the price every minute, for example. Besides scalability problem, right? So you're basically clogging the network. This also is bad for the incentives because everybody, the Oracle knows about, the contract and knows about, the economic incentive there. Instead, in a, say, Bitcoin world, and this is true both for DLCs and also for, Oracle attestation, using Oracle attestation in a covenant on Liquid, the Oracle is basically blinded, meaning that the Oracle doesn't even know. So the Oracle is only, for example, in our case, is a price feed, like it can be Coinbase, for example, just an exchange or any other exchange. And instead of just in their own API, instead of just, announcing the price for BTC USD for every minute, they just add a signature, which is basically a cryptographic, attestation that price is being signed by Coinbase, right? So I think in this scenario is much more secure because the Oracle here doesn't have any knowledge about the contracts. All the, contracts being open on the blockchain because it's only, publishing an attestation. It's just publishing a signature somewhere in their API, in their website. And, there is no knowledge of the contract on their side. So I think, those are the two main differences.
So if someone were about to be liquidated on something like Maker, the Oracle may know that in advance and can participate and try and nudge them to be liquidated or be the one to liquidate them, whereas you can't do that on Liquid. Is that correct?
Yes, in the sense that the Oracle actively knows that is pushing to that specific smart contract the price. So definitely this change the balances of power here. You know what I mean? So there is more interest to try to corrupt the Oracle, and the Oracle may have a nice number with a price. He knows how much will gain, forging his own signatures.
Right.
Instead, yeah.
Okay. So I want to talk about just the idea of over-collateralized lending and bringing some of these DeFi applications to Bitcoin or to Liquid and Lightning. I imagine there's a big group of Bitcoiners that may call into question the need of any of this, right? There's a group that will say, why do we even need stablecoins? One Bitcoin is one Bitcoin, and I imagine there's another group that says, why do we need over-collateralized lending? Why? So I'd love to hear your thoughts on
What's your message to the Bitcoiners who say, listen, we already have this incredible money. It's money. We don't need any additional complexity and things like that. What do you say to that?
Sure, and I think it's a very legit, issue that you may have. I think that let's start from the users. So from user perspective, and especially the two main category of user that we are like talking with, daily. Meanwhile, we are in closed beta. I think that there are two types of users. One, maybe a trader. So a trader currently to go long on their own Bitcoin, and we saw in the last 2 years, basically, what they need to do is going to a centralized custodian and, either over-collateralized or using trust or using, identity as a way to having credit, you know what I mean? Or, they need to go to other blockchains, right? And trying to, swap Bitcoin for Ethereum, for example, and then, issue DAI and then convert DAI maybe to other stablecoin and then buy more Bitcoin. So I think that on a side is more like you are serving a category of user that they are fine with over-collateralized lending, and they're totally fine in how much is faster to go to a protocol and to issue some stablecoin to buy more Bitcoin without any KYC documents or any other account of sort. The other category of users instead, and this I will put myself since I may be the most bullish user of the product because I'm really looking forward to it. I basically live out of Bitcoin, so I receive my salary in Bitcoin 100%, and basically I always find a way to either buy gift cards or to convert Bitcoin to fiat some way to live, right? To spend Bitcoin in the real life. And a lot of users, especially for example in US, whenever you spend your Bitcoin, it's a taxable event. And this basically, in my opinion, is not only a US problem, but many more jurisdictions are in the same category. And I think the possibility to borrow against your own Bitcoin, to have a stable, I would say stable coinish, right? That allows you, to not be taxable, right? So to not pay any capital gain taxes. To do that, that's a pretty compelling feature. And at the moment, this is being sold again by centralized crypto lender, which on the side expose you to, to the profits of companies that, of course, are basically shitcoin casino, right? And on the other side, if they not doing now, they will do it soon. Since you need to do an account, and since they are custodian of your own Bitcoin, they will ask you to do, all the KYC and ML procedure that we don't, as Bitcoiner, we don't like at all, right? So I think that if you want to spend your Bitcoin, definitely, you may want a solution like this that allows you to not have any account. And, as long it's okay for you, the liquid federation model and the liquid federation risk, I think beyond that, you don't have any other intermediary, right? And I think it's an improvement from a custodial centralized exchange to something which is much more trust minimized. Nothing will be censorship resistant, of course. Nothing in life will be maybe neither Bitcoin, but Bitcoin is very, very hard to censor, so we all know. So I think that Bitcoin is like the standard, and anything that goes from custodian accounts to something in the middle, I think is an improvement.
And is it also important to bring up that because you're building on Liquid and Lightning, you're not necessarily adding complexity to Bitcoin's like base blockchain, whereas maybe other protocols you may be adding that complexity. If you're trying to make an expressive like smart contract protocol, you have all this complexity at the base layer. Whereas my understanding here, correct me if I'm wrong, but my understanding is like because it's on Liquid and Lightning, a lot of these decisions are not impacting the fundamental security of Bitcoin, the asset. Is that correct?
100%. And you are only risking everything which is built on top. So the risk is just not systemic. It's just limited to the Bitcoin of, locked in the system. But I will go even beyond that. And if we assume the liquid blockchain to be running some way, even if the synthetic asset, in the case of, for example, Fuji USD, I don't know, goes away from markets, got blacklisted, and it goes to zero, this doesn't matter because it would be even better for you, because as a borrower, you're basically paying zero for an asset to pay back your debt, and you can get back your liquid Bitcoin. And getting back your liquid Bitcoin in Fuji is a non-interactive process, and this allows you to not have any other interaction with any other party. You just spend your Bitcoin like you were spending your own Bitcoin with just a private key, right? But yeah, going back to the original topic, yes, you are totally right. And I think it's, I hear the concern that, this is not interesting for most of Bitcoiners. But if there is a subset of Bitcoiner that may be interested, I think that, doing these things on a sidechain, which is a separated blockchain, is much more better. And eventually, we all know that consensus in Bitcoin is very slow, and this is a feature. And eventually, if we will get, I don't know, from Simplicity or any other Covenant proposal, maybe this can be ported easily, right, on Bitcoin main chain if there is a need and if there is a user asking for it. Instead, other maybe sidechain that they are not based on Bitcoin Core, like, I don't know, Rootstock, for example, you will not be able to port any other logic on Bitcoin main chain when Bitcoin main chain will allow you to do that capability. So I think Liquid is a nice test bed for trying to see what's interesting for Covenants, and especially, what could be an interesting proposal to include Covenants in the Bitcoin main chain.
Right. Now, when you look into the future here and you think about all the things that Fuji Money and Liquid and Lightning can accomplish together, what do you think this opens the doors to? Like, how will the Bitcoin ecosystem look different in a few years, assuming people begin to adopt Fuji and Lightning and Liquid in the way that you expect they will?
Yes, I think that definitely I really expect much more financial application to be trying to be much more trust minimized and to be ported, using these primitives. So I'm really looking forward to option, futures, and any other kind of, financial instrument that at the moment requires trust, require a centralized, I would say, marketplace, or in general, they require a centralized custodian to perform that. But if we can move away from a custodian, then we can definitely try to onboard even much more people to these type of instruments. And I also think that a lot of other, option to improve your own custody and to try to improve your own financial life could arise, right? Because definitely, having Bitcoin in cold storage all the time and just saving, that's great. And it's like great for the times we are being, right? We have been in times where we are over financialized. Everything is basically a debt. Everybody is in debt. So I really think that, the opposite direction that we are taking with Bitcoin is great, because we are like pushing people back to saving, and that's absolutely great. But in a mainstream, I would say, mass adoption scenario, you need the scale of, Visa, and I think Lightning and any other payment channel solution will help with that. But at the same time, you want to also try to decrease the amount of trust that you have with intermediaries, because there is no other ways. And this, creates, as we know, kind of, third parties like regulatory bodies or, agency and so on, that they need to check the market, because people will do bad things with their own money, and they create power. They create power for these, intermediaries, and they create power for these agencies. So I think if we can also have a clear plan for how to try to create this kind of financial products in a more trust minimized way, for sure we can decrease the amount, of systemic risk that we created anyway, that they will eventually happen even with Bitcoin if all the financial products still requires intermediaries to be offered.
Have you spoken to any centralized intermediaries or large financial institutions about what you're building? And if so, what has that reception been like?
Okay, I think that there is definitely two types of, I would say, institution. I think that there is the West kind of institution, which is highly regulated but has all the benefits already. So like we'll say US kind of capital markets in US or even in Europe, they basically had all the benefit in the last 50 years. And they actually don't mind about regulations and this kind of problem because, it's the same problem. They're already big. They afford to pay for extra regulation. It's the small incumbents, coming, or the small player coming that where, the barrier of entry of the regulation is too high. Instead, if you go look outside the West, in other places where even between institutions of different jurisdictions, I don't know, in the Middle East or, Africa area or, Southeast Asia and so on, even doing cross-border trade between two institutions, regulated institutions in their own country, original country, that's very problematic. So my personal experience, I'm based in Dubai and, I work a lot in the Middle East. And the main problem is how, to solve the problem between different jurisdictions with different religion, with different, kind of trying to, laws and so on. And Bitcoin actually is the great bridge. So already institution, this type of institution outside the West, they see Bitcoin as a way to overcome their own local problems. And institution itself, enterprise itself, they really are really interested to lower the amount of paperwork they need to do to try to transact. This will open more markets for them and more trade between them. So I really think that outside the, I would say, US or West, kind of conception of regulation, there is a huge interest in trying to have trust minimized way, even between institutions, not only for, people for their own self-aware, savings. You know what I mean?
Right. So you figure the regulations and some of the paperwork associated with making transactions is a bigger deal than, the ability to have maybe instant transactions or very low fees. Like to the institutions, they're more aware of the paperwork and the regulatory issues than, I found a way here I can improve my margins and get a lower fee on this trade or things like that.
Yeah, consider one other very interesting thing, especially for Fuji Money, is the fact that when you're borrowing, Fuji USD, you are not paying any interest, any recurring interest. And maybe you may not know, but Islamic finance basically is based on the concept that you don't have any interest, any recurrent interest. This is against their own, both religion, but especially, their own economy. So actually, all the crypto lenders that we have in the West, they will not be able to serve this type of customer, right? Because they charge a current interest to borrow, against their own Bitcoin. And actually, Fuji will be totally Sharia compliant products, right? Because there is no recurrent interest and you can borrow against Bitcoin, which is actually the most pristine collateral you can have. There is no trust. It's not a security, right? This is even known now in US. So we all know Bitcoin is not a security. And this from, I would say, Islamic finance standpoint, that was like obvious, right? There was nobody benefiting from Bitcoin itself. There is no pre-mine. There is no original, allocation to founders. So definitely that will, Bitcoin in general is definitely a technology which is much more interesting to that area of the world, maybe than what we may be interested in the West,
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Voltage. Voltage is the industry standard for Lightning Network infrastructure. Creating layer 2 applications and services on top of Bitcoin starts with Voltage, where you can spin up nodes, get access to liquidity, optimize your node, and much more. Voltage is leading the way as the next generation provider of Lightning Network infrastructure. And if you want to get a free trial and start using Voltage today, you can do so at voltage.cloud.
Right. So that's really interesting. There's going to be no interest rate charged on if you deposit Bitcoin as collateral and you then create Fuji USD, a portion of your collateral with using a portion of your collateral, are not going to be charged interest rate as long as that remains open. correct?
100%. There is no recurrent interest. There is only a setup contract fee, but this is just paid at the beginning and is paid in kind in Fuji USD in the synthetic asset. But there is no recurrent interest.
Is the business model? Is the business model then every time someone creates a contract, you're going to earn money?
Yeah, the main business model for us, for the project, is the setup contract fee and also the liquidation spread. So whenever there will be a liquidation to be happen, we keep, of course, all the, we sell the collateral to buy back the synthetic asset on your behalf. And if you are fast, we keep the over-collateralization ratio as well. So for example, if you're fast and the collateralization ratio is 150%, we keep 50% as a, as a penalty for the confiscation of your collateral.
Why has no one else tried this approach, or have there been other instances of in the crypto space, crypto lenders taking this like 0% interest approach? Because my impression is that almost all of them have some kind of recurring interest rate. Why do you think that is?
Yeah, consider that the synthetic asset protocol is not really, you're not leading borrowing from someone else, right? So in a crypto lender, typically you're basically borrowing, but there is someone which is lending to the crypto lender itself, right? So it's not the crypto lender, it's like a bank, right? Someone is depositing money and then the bank lends to someone else. So I think, of course, in this type of system, which is literally like what banks doing, since ages, I think in this type of system, you need maybe this kind of business model to keep, the risk and to have an interest to keep, having funds and the custody risk and so on. Instead, I would say, Fuji, you are not literally, nobody's lending the asset, but the asset is being created when you borrow. So when you borrow, you basically issue at that moment the asset based on the collateral value. And when there is a liquidation, or when you want to take it back, simply you want to just take it back your Bitcoin, you must burn the Fuji asset that has been issued to you at the beginning. Either being in the close case, when you are closing, you are burning, or in the liquidation case, we are burning since we are the liquidator.
I see. I want to get into Lightning specifically. Can we do a highlight on exactly how Fuji interacts with the Lightning network, and in what cases a user might be actually sending funds across Lightning?
Yes. So one thing which will be available in the app, and now beta testers are trying it out, is basically we are using submarine swap to go from Lightning to Liquid, right? So usually use submarine swap maybe to rebalance your channels, or you would just get some Bitcoin main chain without closing your channels, for example. But actually, if you use Liquid as a base chain instead of Bitcoin, you are literally depositing or withdrawing from Liquid at the velocity of Lightning using a submarine swap provider right in the middle. And in this way, you can use your own Lightning wallet to borrow and to get Fuji USD on Liquid without having to go buy liquid Bitcoin on the market, or to do a peg-in, which takes 1 day, right? It takes 100 Bitcoin blocks. So this way is much more faster for you to get in, and also you can get out to your own Lightning wallet. Only the collateral will be held in the Liquid covenant, in the Liquid smart contract. But this is, again, very similar to the model where, Lightning user already use. They go to a website, they create an account, and then they deposit Lightning to that account, or they withdraw. But all the logic can be audited. All the logic and all the balance sheet of this system service is basically custodian, and you are trusting them. In Liquid, at least, you can run a full node, you can verify block per block the amount of liquid Bitcoin, being born, issued, and you can also verify, you verify all the issuance of Fuji and all the burn of Fuji and so on.
Right. Now, on the Lightning Network today, a lot of the transactions that are happening are relatively small in size. I believe the transactions happening on other lending protocols in the crypto space are really large transactions sometimes, and people are sometimes, collateralizing millions of dollars. Is this something that Lightning can handle today? What do you think about the capacity for Lightning to process some of these larger transactions that someone might want to make if they are doing over-collateralized lending?
Yep, I think that should be clear the fact that you basically, when you're like depositing and doing a sum-money swap, you only have one channel, right? Or maybe multiple channels, but will be convenient for you if you're using, for example, Fuji a lot and you want to use Lightning. It will be convenient for you to open a channel directly with the sum-money swap provider, and you only need to open that channel with him, because when you're depositing, then when you're done with your, when you're done and you want to get back your collateral, you're using the same channel that you used to deposit at the beginning to get it back. So if you create a channel of the size that you're okay with, you can theoretically, with very big, you can technically create very big channel. Of course, you cannot travel all the network, but you are only doing one hop, right, from your own wallet to the sum-money swap provider and then back to you. So you can even create one BTC channel, for example, right? Or but yeah, I think that in general, this model could work because you're basically using a provider to provide you routing and channel management, but you're only basically using Lightning for the nice UX of fast and fast deposit and withdraw.
Nice. What does the roadmap look like for Fuji Money? Like, where are you guys at in the process of building this platform today? And what can listeners expect to see over the next, 6-12 months?
Yes, we are currently in closed beta. We are learning a lot. We are talking with with user almost daily, and that's very interesting because we are really very focused on trying to solve their needs as much as we can. At the moment, we are really looking forward to trying to go, I would say, feature complete, to release it to a public beta and to try to onboard much more people than the currently, closed beta that we are doing now. I think this could happen end of this quarter or realistically beginning of the next year. And at the beginning of the next year, the idea is to make the initial mainnet issuance, because at the moment the closed beta is testnet, so there is no value in the funds being issued yet. So I think that beginning of the next year, we're really looking forward to make the first issuance of Fuji USD. Then our roadmap is, of course, again, depending on the user needs. But as I said before, the main two category of user traders, they will still have a web apps, so they can easily, go long on their own Bitcoin. So they don't even need to go and buy Bitcoin with Fuji USD. We will allow them to connect to any DEX like TDEX or Bitmatrix on Liquid, so they can right away, borrow and go along on their own Bitcoin, right? Without leaving their own wallet. And the other is like creating a mobile app for end users, especially for retailers or people that, want to simply spend their own Bitcoin, right? And they just want, with a tap on their mobile phone, borrow or just increase the type of collateral to have a sort of a credit line in the stablecoin, and then use it to buy gift cards, to integrate with gift card company or virtual prepaid card. Especially in the US, you can have virtual prepaid card with no KYC. So we're working with, various, wallet and Bitcoin company in the space working in this sector to try to integrate this, to try to give you a nice ecosystem where you can spend, use, and trade with Fuji USD, and of course, being able to borrow against your own Bitcoin collateral to issue more Fuji USD.
Right. Now, when issuing Fuji USD, do you have any concerns about the regulatory attention that could draw? And if so, what are the scenarios in which you're concerned about, or in which it could lead to some kind of regulatory capture, or some issue that is presented by a government saying, listen, can't be doing this, you can't be creating USD stablecoins we're going to clamp down. We're going to try and shut this market off. What are your thoughts on that kind of situation?
Yes, I think that the first answer I will is the contract that you already issued cannot be. I mean, the Fuji USD being issued cannot be frozen. So all the contracts being issued, all the Fuji USD being issued before any regulator, shut down, they will still be open, right? And so again, there is no risk of your collateral. You can always redeem, so nobody can interrupt or stop you to do that. Definitely, they can eventually stop new issues, but everything is open source in terms of client software and governance contract is already open source. It's been published in our paper in February. So the idea will be, okay, so likely will not operate eventually the Fuji itself, but definitely there is other people that can pick it up and do other approach. And this is just, my worst case scenario, right? So I'm just, putting ahead and saying, okay, anything can happen. Nothing is, very hard to censor like Bitcoin, and they are trying every day to censor Bitcoin. So the war is never ending, even for Bitcoin itself. So I'm really thinking that this definitely could happen. One thing I would say is like issuing synthetic asset with this model is more similar to create a multi-signature wallet. And having any regulator to try to say, okay, you can't share public key with other parties to create a multi-sig, I think that will be a stretch in any jurisdiction, right? Because essentially you're not depositing funds in us. We are not custodian. We are not an intermediary. You are locking funds in your own address, which has some rules that you agreed beforehand to deposit. So I think it's much more similar to a co-signer server, right? Or co-signer service, multi-signature service. So I think it's more like in that scenario. I think that the third approach will be to try to move all our capabilities like liquidation to be open to everybody. And this way, basically, there is no single point, so everybody can do it. Although there are some concern, and that's why we're not starting with an open liquidation scheme. Mostly around, we want to be very sure that all the liquidation infrastructure is like that, well tested and it's fast, it's responsive, and most important, we find a solution for the Oracle problem in the end, because Oracle, they might not, try to cheat on you on purpose, but they may have bugs, right? So last 2 years ago, Binance, published zero. The price of BTC was zero for, a couple of seconds. If that happens, and if the liquidation is open to everyone, I mean, it means that they can liquidate every contract, right? Being open. And so I think as soon we can, in a version 2, for example, of Fuji, we can, try to, limit this risk, maybe doing some average, in the contract itself. So inside the covenant itself, we do some average, we require you more Oracle and things like this. As soon we try to solve this solution, we can also open to liquidation, and this definitely will increase the resiliency of the protocol.
Nice. What's the relationship going to be over time with Volpum and Fuji? Is this going to continue to be a project underneath Volpum? Is it going to be spun out into its own project? Can you talk to me about how that relationship will develop over time?
Oh yeah, in general, we are more like a venture builder model. So we work with us, with other partners as well. And eventually when, a project is not open source, is a service and gets some traction, what we usually did in the past was creating a spin-off company dedicated to, just to having a dedicated team to that. So I think that the path will be the same. So, Fuji will have his own company, and of course, Volpum is just incubated at the beginning, the project with research capabilities and knowledge and engineering, and eventually, Fuji will be spin-off will be a spin-off from Volpum itself.
Now, for all the Bitcoin builders listening to this podcast, do you have any ideas, any specific projects you wish Bitcoiners would take on? You wish people would realize is possible, things that maybe no one is doing today, or things that aren't getting enough attention today?
Well, there are a lot of things that I think that, especially in a project like Bitcoin, which there is no, centralized marketing department or in general, no CEO. There are also things that, in my opinion, should, have much more attention. But I think from my personal standpoint, I'm really looking forward to having governance capabilities on Bitcoin to have much safer Bitcoin custody solution. Even as a technical user as I am, I can, roll out my scripts, I can roll out my multi-signature script and so on. Still, I'm not feel confident to storing, generational wealth this way. One is the inheritance problem, right? That can be solved, but not yet. There is no battle-tested solution to that. And also, especially the fact that, yes, I can have a multi-signature, I can have a lot of keys, but one more keys increase my operational cost to, store my keys. And also they don't, it's not a zero chance that you can lose those keys or your attacker can, get ahead of your majority of your keys, right? So I think that, covenants, especially construction like smart vaults, to me are really the really missing piece. I could live without it, but if I look in generation and not, just years, I really think that, that's the missing point. So really looking forward to things like simplicity or any other proposal that will allow us to try to do this kind of more advanced vaults, right, for your Bitcoin to try really to move, the next, the wealth of, the next generation, right?
Mm-hmm. Okay, I want to jump into a segment I do at the end of every show called the lightning round. Are you ready?
Yes.
I hope you're enjoying the show so far. I just want to give a quick shout out to our sponsor, Stackwork. Stackwork is a lightning-powered platform that generates high-quality transcripts from all of your audio or video content. They combine AI engines and hundreds of human workers all over the world who are paid over the Lightning Network to assemble these transcripts. And that's what lets Stackwork create better, faster, and less expensive transcripts than anyone else. I've used Stackwork to transcribe all of my episodes on my personal website. You can check that out. I just get the Stackwork file, copy, paste, and go. No additional editing required. If you want to learn more about Stackwork, you can visit stackwork.com. That is STAK work.com.
First question. Is there any book that has meaningfully changed your view of the world?
I think definitely Sovereign Individual. So I read lot of years after, I started working in Bitcoin and so on. But really reading it, I said, wow, I really wish, to be in the 90s and reading this and not acting. I was like, this is literally like a game changer for me and how I see macro events and in general, say use topics, and it's definitely changed the lens I use to see by macro events.
Yeah. If you had to guess, how many Bitcoin will be on Liquid in 5 years?
Let's say we reach 4K BTC in 4 or 5 years now. Let's say 10K BTC. I'm not good with predictions, but maybe it's conservative to say to double it.
Okay, so right now we're at about 4K. Is that correct? And then 10K.
I think don't take my word. So run a liquid full node and verify. But yeah, I definitely think that we are around that number.
Okay. Same question for Lightning. How many Bitcoin will be in public capacity on Lightning in 5 years?
Well, I really wish it never increase because I really want to be much more private channels, right? So we all know that, public channel is like not great for your privacy, but at the same time is what allows to have more hops. I think that there are a lot of unsolved challenges with Lightning, right? But at the same time, I really, jokes apart, I really think that maybe that could be doubled easily in terms of public channel capacity, but I'm really looking forward to a more private Lightning network because I said at the beginning, I really think that confidentiality is a key for normal financial activities. So I think that I'm really looking forward to have much more liquidity, but in private channels, right?
Yeah. If you could only hold one asset for the next decade and it could not be Bitcoin, what asset would it be?
Interesting. It's hard because with all with all ideas I have currently, will be very hard to say any other assets. I think maybe art. Art will be the thing, not for a financial perspective, but I would say if we all know that we are going in a very bad outlook and scenario, at least I want to contemplate some beauty. Yeah.
Yeah, you got something nice to look at if the world falls apart. All right, and one final question: if you can give a shout out to any Bitcoin builder, any company who you want to give more attention to, or you think deserves more awareness, who do you shout out in the space? Who's doing great work that you want to draw more attention to?
Well, I'm biased since I started my Bitcoin career with peer-to-peer, local cash exchange. I really think that companies like Peach, which they are building in Switzerland, a way to exchange directly very easy between you and other peers from fiat to Bitcoin. That's definitely something needed, and I think they are nailing it. So really looking forward to what they releasing soon.
Awesome. Thanks so much for taking the time. Where can listeners go to learn more about you and Vulpin Ventures?
I think vulpin.com is the right website. If you want to learn more about Fuji, you have a website which is fuji.money. So you have there all the links to the Telegram group. You have all the website, the paper. You can read more about the paper and all the social links and so on, and all the frequently asked questions are there. So I think that's the best space where you can learn more about it.
Awesome. Thanks again for the time. Hope we can do it again soon.
Thank you so much.
In the last 7 days, you guys sent in 23,982 sats. That came in from 31 different supporters. Thank you to everyone who has contributed. First, let's run through the top 5 supporters of the week. We have an anonymous user from Castomatic who sent in 8,502 sats. Another anonymous user sent in 4,900. Urza_CC sent in 2,838. Odium sent in 2,278. StemR42 sent in 2,121. 2121, it's a good number. Let's get into the boosts. We had a few messages sent in from listeners this week. We have Urza_CC says, great episode. That was in response to episode 76 with Chase Perkins. An anonymous user said, love your podcast. Lightning will be a game changer for payments, and sent in 4,900 sats. And this was in response to episode 77 with Sam Wouters. Omverse from Podverse sends 2 messages, and each says, well, the first one says test and sent in 47 sats. And the next one says test 2, sent in 735 sats. Omverse, your tests worked. Thank you for the sats. And I cannot wait to see what you guys send in this week.